In this video, we're going to talk about trading volatility compression. Stay tuned. Hey traders, a very warm welcome to you. So volatility is a measure of how much the market is moving within a given time. So volatility compression is when that volatility decreases, and volatility expansion is when that volatility increases. Now, volatility doesn't have a directional component, so we don't know if it's going to go up or down. We just know it's going to increase its range. In other words, if we've been having a daily range of, let's say 100, 90, 95, a volatility compression would be, we're going to 50 to 40, and the volatility expansion will be go up to 300, 400, whatever. Extreme, but you get the idea. Just to put that into perspective, and those will be daily ranges, so distance between the high and the low. So we can see though, from a trader's perspective, this is quite interesting because if we can get the direction right, if we can kind of make sure we kind of get a few guides as to where the direction could be, or maybe wait for it to start to go, if we believe there's a volatility expansion coming, it allows us to take the trade. If we assume that the direction is going to continue, we're going to get decent risk reward on our trade. If we know something's going to break out and it's going to continue a long way, we don't know which way it's going to break out. That's not a bad kind of edge to start with, right? So trading volatility compression. Often we will get this. What's the tradable pattern that we often see in charts? Let's say we have a price that's been doing this, it's been swinging around, doing a lot. Then all of a sudden, we get this. That's a volatility compression. Imagine that's a daily chart. You've got pretty decent volatility. Then all of a sudden, we just get nothing happening. There's like a calm before the storm. Everyone is waiting to see what's going to happen. And very often, actually, guys, and you can see this in your charts yourself, we get this within uptrends. We have an uptrend, and then we'll have a very kind of low period of volatility, and often coincides with a bull flag as well, or a bear flag. And these very, very often precede volatility expansion. Because we have volatility expanding and contracting, very often when we have this volatility compression period, and this is what we're trying to look for, we can assume, okay, we're trading, we don't know for sure, but we can know with some confidence, and we can only play what we know historically works. When this breaks out, we're going to get a decent explosive move. Now, this is different from when we've talked about before in videos, ranges being in terms of time and how long they take to be in a range. That could be quite a wide range, but if it's been in there for a long period of time, we talked about the expansion from that. This is different. This is basically how narrow the range is, how small it is, and also generally it's going to come with a decrease in volume as well. So your volume down here is going to be up here, then all of a sudden it's going to be tick, 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 tick. And okay, let's forget about if we're trading a 24-hour session and this happens to be overnight, or if it's a holiday or something, we can obviously ignore it. But if we've had a good market action and there's no reason for this to happen, and we're kind of saying, well, you know what, there's good market action, it's a normal trading day, there's normal volume elsewhere, there's no reason for this, but all of a sudden this particular market is exhibiting this volatility compression tendency, we want to be ready for this. We want to say to ourselves, okay, when it breaks, we want to be on it. Now, obviously, if we're in an uptrend and that happens at the highs, we're more than likely going to want to trade a continuation trade as the volatility expands out. If we're in a range-bound condition, perhaps we want to wait and see which way it breaks and see what's going on first before we commit. That makes perfect sense to me. Now, there is Linda Bradford Rashke. If you've ever read any of her books, she did the book Street Smarts, which is a very cool book. She's done some other good stuff as well, which is worth looking at. I think it was her, it may be her, but this is where I got it from. Perhaps she got it from someone else who did some studies on this. She did some studies on what's called a narrow range 7. So in other words, this is the narrowest range out of 7 days. So you should look at a daily chart and should be plotting the ranges. Here's the ranges. Whatever it may, 1, 2, 3, 4, 5, 6, and then we have a 7th, which is a small range. This would be the narrow range 7. And so she would use this day, whatever that may be in the candle. So I'm not going to draw each candle, but you can assume what they would look like. She would say that the day after that, we're probably going to get a volatility, an explosive move, a trending day. So while the narrow range 7 might be, a very kind of quiet, nothing day, nothing happening, narrow range relative to the prior 7 days, then she can position for a trend day the next day. However you do that, whether you start to look at the open for some kind of double bottom to get long, or explosive 15-minute drive or whatever it may be. But again, it's adding just something else that makes you say, okay, I'm now going to look for a trend day. And it's using the theory of that volatility compression. When volatility is compressed, it's going to expand. When we've got some kind of signal, however we do this, narrow range 7, I think there's narrow range 4 as well. There's probably narrow range 30, whatever. The point is, when we see that narrow range, and that will be obviously on a 60-minute chart, you won't see that on one particular candle. On a daily, you'll see it on like a 60, the narrow range, but in a day, it will still be a small range. Then we look for volatility expansion, wait for the break, position. In other words, trade with the trend, as opposed to trying to fade mean reversion trades after volatility compression. That's the kind of thing that the rules we can start to add. When we've had volatility compression, we get volatility expansion. We're not trying to be clever here and sell double tops, because we've come out of that low volatility phase into a high volatility phase. At least add that filter that says, you know what, I'm only going to trade with the trend. I'm not going to try and be clever and fade stuff. Whereas maybe you've gone from big volatile area to a low volatile area, you might flip that on its head. But sticking with this one for now, volatility compression, very useful, worth scanning for on your charts, worth putting together a set of rules for, to be prepared for it, whether you're going to trade it or whether you're just going to add kind of caution rules that maybe you don't start fading stuff after that volatility compression period. All right, guys, thumbs up if you like this kind of stuff. If you haven't subscribed yet, consider doing so for more videos from me and other traders on this channel. Good trading, keep your risk managed. I shall see you in the next video. Goodbye.